Hey folks, I hope you're doing fine. I'm Simo from Investment Research, and today I need to talk about what's happening with Bitcoin right now on November 20th, 2025. So looking at where we are this morning, Bitcoin is trading around the $101,000 to $103,000 level after what's been an absolutely brutal stretch for the flagship cryptocurrency. And I need to walk you through exactly why we've seen this massive drop, what the data is telling us about November and December, and what we should expect heading into 2026 based on historical patterns and institutional dynamics. In my view, the most critical thing to understand about this Bitcoin sell-off is that we're experiencing the first sustained break below the psychologically crucial $100,000 level since late June 2025. According to what happened this week, Bitcoin plunged below that six-figure mark, hitting lows around $98,900 to $99,966 during intraday sessions, which tells you this isn't just a minor technical consolidation, but a real test of market structure. Now, based on the price action over the past month, we've seen Bitcoin lose approximately $20,000 in value from recent highs near $126,000, which represents roughly a 17% decline, and that kind of move demands serious attention from anyone managing capital in this space. According to the institutional flow data I've been tracking closely, and this is absolutely critical to understanding the current weakness, US spot Bitcoin ETFs have been experiencing sustained outflows that are putting real pressure on the market. In my view, the ETF complex hemorrhaging over $2.6 billion across multiple days represents one of the most significant redemption periods we've seen since these products launched. Now, according to the specific data from this week, we saw 6 consecutive days of outflows totaling approximately $1.9 billion from Bitcoin ETFs, with major players like BlackRock's IBIT recording $375 million in withdrawals in a single session, Fidelity's FBTC seeing $256 million leave, and ARK's ARKB experiencing $144 million in outflows. Based on my analysis of these flows, when the largest marginal buyers in the Bitcoin market turn into systematic sellers, that creates a liquidity vacuum that's extremely difficult for the spot market to absorb. Now, according to the macro backdrop driving this weakness, and this is where the institutional selling makes sense, we're dealing with the ongoing US government shutdown that began October 1st and has now matched the record from 2018 to 2019 at 35 days. In my view, this government dysfunction is creating risk-off sentiment across all asset classes, but it's hitting Bitcoin particularly hard because institutional allocators view it as a high beta risk asset. Based on what I'm seeing in the correlations, Bitcoin is down about 11% since the shutdown began, while the Nasdaq and gold have actually risen 2% and 4% respectively, which tells you that the typical narrative about Bitcoin being a safe haven or inflation hedge isn't holding up in this specific environment. According to the historical seasonality data for November, and this is where things get really interesting for the forward-looking outlook, Bitcoin has this reputation as having explosive November performance, with some traders calling it Moonvember, based on an average historical gain of about 42%. In my view, though, that statistic is incredibly misleading because it's massively distorted by November 2013 when Bitcoin surged over 449%. Now, based on a more accurate statistical analysis using median returns rather than mean returns, the typical November performance is actually closer to 8.81%, which paints a much different picture. According to the actual November results over the years, we've seen deep losses in 2018 with negative 36.57%, 2019 with negative 17.27%, 2021 with negative 7.11%, and 2022 with negative 16.23%, mixed in with strong gains in 2020 at positive 42.95%, and 2024 at positive 37.29%. Now, according to where we stand in November 2025, we're currently showing just a modest 0.54% gain for the month so far, which suggests this November is tracking more like the mediocre years rather than the explosive ones. In my view, the key question is whether Bitcoin can hold above the $100,000 level through month end, because based on the technical structure I'm monitoring, a weekly close below the 50-day exponential moving average, which sits around that zone, would signal that this correction has further to run. According to the analyst community, there's a legitimate debate about whether we've seen the low or if we need to retest the $92,000 area where there's a CME futures gap that remains unfilled. According to the forward-looking price predictions for November specifically, and I've analyzed multiple forecasting models, the consensus view suggests Bitcoin should trade in a range between roughly $102,000 on the low end and potentially $128,000 on the high end if we can break through current resistance. In my view, the base case scenario for November is that we consolidate in this $100,000 to $110,000 zone, work off the technical oversold condition, and set up for a potential year-end rally. Now, based on what needs to happen for the bullish case to play out, we need to see sustained ETF inflows return, which according to yesterday's data actually did occur, with $240 million coming back into the funds after that 6-day outflow streak, and we need Bitcoin to reclaim the $108,000 to $110,000 area decisively. According to the December outlook, and this is where the historical data becomes more constructive, December has traditionally been a strong month for Bitcoin in bull market years. In my view, December 2025 could see Bitcoin targeting the $125,000 to $135,000 range if the current consolidation holds and we get positive catalysts. Now, based on the specific forecasts I'm tracking, analysts are projecting December price targets anywhere from $84,000 on the very bearish end to $135,000 on the bullish end, with the median expectation sitting around $109,000 to $110,000. According to the seasonal patterns, Q4 has historically been Bitcoin's strongest quarter, and despite the current weakness, the underlying fundamentals around institutional adoption, ETF demand, and the supply dynamics haven't changed. Now, according to the 2026 outlook, and this is where we need to think about the bigger picture cycle dynamics, the forecasts diverge pretty dramatically based on different assumptions about institutional flows and macro conditions. In my view, 2026 is setting up as a year where Bitcoin could trade in a wide range between roughly $95,000 on the low end and potentially $212,000 on the high end, depending on how the various catalysts play out. Based on the institutional forecasters I respect, Standard Chartered is projecting Bitcoin could hit $200,000 by the end of 2025, extending to $300,000 by end of 2026, while more conservative models from firms like CoinCodex are suggesting we could see a pullback in the first half of 2026 down to the $93,000 area before recovering. According to the bull case for 2026, and this is the scenario I personally lean toward based on the structural factors, Bitcoin should benefit from several powerful tailwinds. In my view, the continued growth of spot Bitcoin ETFs, which now hold approximately 1.8 million BTC or about 8.5% of circulating supply, creates a sustained bid that wasn't present in prior cycles. Now, based on projections from firms like Bitwise, cumulative ETF inflows could exceed $400 billion through 2026, with potentially $300 billion coming in 2026 alone if adoption curves continue. According to the corporate treasury adoption trend, we're seeing companies like MicroStrategy now holding close to 400,000 BTC and showing no signs of stopping, which further tightens the available float. According to the supply side dynamics heading into 2026, and this is crucial for the bull thesis, we're still benefiting from the 2024 halving, which cut new supply issuance in half. In my view, when you combine reduced issuance with growing institutional demand and corporate treasury adoption, the setup for a supply squeeze remains intact. Now, based on where the market cap could go, Bitcoin sitting at around $2 trillion today is still only about 15% to 20% of gold's market capitalization. And according to long-term strategists like Michael Saylor, if Bitcoin captures even 30% to 40% of gold's addressable market, you're looking at potential prices in the $200,000 to $250,000 range by late 2026. According to the bear case risks I need to acknowledge, and in my view these are real, not hypothetical, we could see Bitcoin struggle in 2026 if several things go wrong. Based on the macro environment, if the Federal Reserve ends up cutting rates less than expected or even raising them again due to sticky inflation, that would be a significant headwind for risk assets, including Bitcoin. Now, according to the geopolitical concerns, ongoing US-China tensions and potential regulatory crackdowns remain a persistent overhang, and we saw earlier this year how the China export restrictions on chips cost Nvidia $5.5 billion and created similar ripple effects across crypto. According to the 2026 setup, and this is where I want to leave you with the big picture view, I believe we're in the early to middle stages of a secular bull market for Bitcoin that's being driven by institutional adoption at a scale we've never seen before. In my view, the ETF complex fundamentally changed the game by making Bitcoin accessible to trillions of dollars in traditional finance capital, and we're still in the first year of that adoption curve. Now, based on the amount of capital that could potentially flow into Bitcoin if it becomes even a 1% to 2% allocation in mainstream portfolios, the addressable market is measured in the hundreds of billions, if not trillions of dollars. According to where Bitcoin could be trading 12 months from now in November 2026, I think a range of $150,000 to $230,000 is entirely reasonable, assuming the institutional adoption thesis continues to play out and we don't get a major macro shock. According to my final take on Bitcoin here on November 2025, this current weakness around $101,000 to $103,000 represents a high-quality dip buying opportunity for investors who understand the longer-term structural drivers. In my view, the institutional selling we've seen through ETF outflows is mostly technical in nature, driven by the government shutdown and general risk-off sentiment, rather than any fundamental deterioration in Bitcoin's investment thesis. Based on the historical patterns, November and December combined have delivered positive returns in most bull market years, and 2026 should see Bitcoin benefit from the combination of supply constraints from the 2024 halving, growing institutional and corporate adoption, potential Federal Reserve easing, and the simple fact that we're still early in mainstream awareness, with Bitcoin penetration in traditional portfolios remaining extremely low. Now, according to the data and my analysis of the institutional landscape, I think Bitcoin holders who can weather the near-term volatility will be well rewarded over the next 12 to 18 months, and this current pullback will be viewed in hindsight as one of the better entry points of the cycle. Now, according to the institutional positioning perspective, and this is where my contacts on the buy side are really valuable, the current weakness is being viewed as healthy consolidation rather than a fundamental break in the trend. In my view, when you see Bitcoin pull back 15% to 20% and then stabilize rather than cascade lower, that demonstrates there's real demand underneath supporting the market. Based on the accumulation patterns I'm tracking, addresses holding between 100 and 1000 BTC have been adding aggressively during this dip, and historically that cohort represents sophisticated investors who tend to buy value rather than chase momentum. According to the technical setup right now, Bitcoin is testing critical support at the 200-day exponential moving average, which sits around $102,000, and this level has acted as strong support throughout this bull cycle. In my view, as long as Bitcoin holds above $100,000 to $102,000 on a weekly closing basis, the intermediate term trend remains intact, and we should expect a rebound into the $110,000 to $115,000 area relatively soon. Now, based on the volume analysis, we're seeing capitulation style selling volume, which often marks near-term lows, and the RSI on multiple timeframes has reached oversold territory that historically precedes bounces. According to the on-chain metrics I monitor closely, the MVRV ratio, which measures unrealized profit across the network, has been drifting lower and is approaching the 1.7 to 1.8 range that has consistently acted as a profit floor during this market cycle. In my view, if Bitcoin were to drop further and retest that zone, we'd be looking at prices in the 91,800 to 97,200 range, which would represent the absolute floor where long-term holders typically step in aggressively. Based on the exchange reserve data, we continue to see Bitcoin leaving exchanges, which is generally bullish because it indicates holders are moving coins into cold storage for the long term rather than keeping them available to sell. This investment research paper for Bitcoin on near future and close term. See you next one.